Following a week of subdued price action, gold had a crack at $1,600 during Friday's US trading. The rally built on earlier gains that followed an agreement among European leaders that bailout funds might be used to directly recapitalise European banks. Silver also rallied on Friday, although, like gold, it remained significantly below June highs. Expectations were low ahead of Thursday and Friday's European Union summit, and this was reflected in the markets. In the early hours of Friday morning, however, European leaders issued a statement saying that, subject to the creation of a supervisory mechanism for Eurozone banks, bailout funds might eventually be injected directly into banks rather than having to be channeled through governments. There were also indications that bailout funds might at some point be used to buy distressed sovereign bonds on the open market, with the aim of reducing the borrowing costs of distressed nations. This would represent a significant defeat for German Chancellor Angela Merkel, who repeatedly expressed her opposition to such an idea in the days leading up to the summit. Friday's rally meant that the final London gold fix of the week, and indeed of the first half of the year, was $1,598.50. This represents a 1.5% gain over the last 6 months. On a quarterly basis, however, gold in dollars lost 3.8% in the 3 months to the end of June, the worst quarterly fall since Q3 2008. Gold also saw a quarterly loss in sterling, down 1.9% since March, although the sterling gold price ended the first half of the year more or less exactly where it started. Gold in euros, by contrast, posted a 1.1% quarterly gain in Q2, while euro gold prices rose 3.6% over the first half of the year. A big development over the last 6 months has been the fall in gold demand from India, traditionally the world's largest market. Currency weakness has seen the rupee gold price hit record highs this month. The Indian authorities, meanwhile, have stepped up their efforts to discourage people from buying precious metals, which they say exacerbates the country's trade deficit. The government has twice raised import duties on gold and silver since the start of the year, while the central bank this week confirmed it was considering a ban on gold coin sales by India's banks. The other factor weighing on gold has been the strength of the dollar, which tends to do well at times of market stress. Indeed, it is telling that despite a weak performance by last year's standards, gold has still posted gains this year in those currencies whose value has been undermined by crisis. Next week sees the US markets closed on Wednesday for the 4th of July, while on Thursday the Bank of England will decide whether or not to undertake more quantitative easing. The European Central Bank also announces its latest policy decision that day, while Friday sees the latest US non-farm payrolls, which as always has the potential to move the market, at least in the short term. To keep up with the latest in gold and silver, visit goldnews.bullionvault.com.